Okay, let's look into a video on a cheat sheet for what? For mutual funds portfolio. This is a cheat sheet, is a shortcut for a do-it-yourself type folks to put together a mutual funds portfolio. Let's continue here. It's for do-it-yourself folks and by Sarwan Agarwal. Let us continue. Let's continue the sections I am going to discuss in this video. Okay, let's continue. First section is audience. Who is the audience for this presentation? Who can benefit? Let's continue. Next, we'll discuss we'll design a passive portfolio. Next, we will determine allocation from that portfolio. Next, we will build an active portfolio using that allocation we got from passive portfolio. Then we'll do dry run and see if active portfolio we just built. Let's continue. Who's the audience for this presentation? The presentation is for do-it-yourself folks who either wish to build a risk-specific passive portfolio or to quickly put together a decent active portfolio with very little research. Let's continue here. With info in the presentation, a user can put together decent passive portfolio in half an hour or so. Further, an investor can develop a decent active portfolio in 2. Audience continue. The presentation introduces you to some tools. All of the tools introduced are available for free online. You might have to register with the Morningstar for some of the tools. Let's continue. Intent of this presentation is to design a decent and not necessarily a great portfolio. Okay, so we'll do a decent portfolio. For great portfolios, I have another video series coming up. Okay, it's coming. Let's continue. The presentation also compares portfolios. You can compare past performance of candidate portfolios and select a portfolio for implementation. Let's continue with the next section here. Okay, next section is design passive portfolio. Let's continue. So we will do passive portfolio. This time we will use the tools at Vanguard. Okay, we will use Vanguard's recommendations to build a risks specific passive portfolio. For that, URL is that personal.vanguard.com and /us/funds/tools/ this is the tool that comes up, and you select time horizon, your risk tolerances, and some other data here, and then tool gives you your recommended portfolio. Let's continue. Let's see what the recommended portfolio is. From there, the tool comes back to this next screen. Here it says that recommended portfolio is 35,000. 35% is that total US stock market, 15% is a total international stock market, and 40% is a total bond fund US based, and 10% is a total international bond fund. Okay, let's continue. So tool suggested I need to have a Vanguard total stock market 35%, total international stock market is 15%, total bond fund is 40%, and total international bond fund is 10%. Let's continue from here. Intermediate bond. This international bond fund has a short trading history. I like to see fund behavior during 2008 crash. For analysis, we will use Vanguard total stock 35%, international stock market 15%, and Vanguard total bond fund 50%. So I just combine these two funds into one, and we'll just use a total bond fund. For investing purposes, you can go ahead and use a 40% bond fund and 10% international bond fund, but we would for analysis we'll use this Vanguard total stock market 35% and Vanguard total international market stock 15% and Vanguard total bond Let's continue. Okay, we'll use a tool at BlackRock for ETF portfolio for designing a passive portfolio using ETFs. If you like ETFs, use a BlackRock tool. Okay, a search for iShares Core Builder in Google. So this is, we are looking for this tool iShare Core Builder. Okay, and then you click the return link to. Okay, and let's continue. Let's then you get tool like this here with long name here, okay, and the long URL. Then you click the start button here and click the start button here. Let's continue from here. After that, enter your risk tolerance data, and then the tool gives you a passive portfolio. Okay, let's continue. Let's see what kind of passive portfolio the tool gives. Okay. So it gives you a this kind of picture here: IGH 9%, IEFA 19%, IVV is 15%, IEMG is 5%, ISTB is 5%, IJR is 5%, AGG is 42%. Let's continue from here. Okay, and based on your answer, this mix of iShares Core ETF matches a moderately aggressive investing style. Okay, and I probably picked up $100,000 for investment. Okay, let's continue. So this is the your mix. Let's say 1, 2, 3, 4, 5, 6, 7. It gives you 7 different ETFs. Okay, and this is listed. We just gone through. These are your US stocks, these are your international stocks, and these are your ETFs. These are US stock ETFs, these are international stock ETFs, and these are your bond fund ETFs. Okay, let's continue. So 15 and 9, 24, and 5, 29. So 29% is a US stock, and 19 plus 5, 24% is your international stocks. So and 47% is a bond fund. So we have 53, 47 portfolio here, and the international is 24, and US is 29. So okay, let's continue the next section here. So next section is we are going to determine allocation. Okay, and build an active portfolio after that and dry run. Okay, and we'll check them out to see which portfolio is better and if any. Okay, we'll try to determine allocation here. Okay, let's see what that we mean by that. Okay. At this time, we will study Vanguard portfolio in greater details. Okay, that's the mutual funds portfolio we had. The other one we got a BlackRock portfolio, that is ETF portfolio, and we're trying to work on a mutual funds portfolio. And how to get insight into a portfolio, we will subject that to an X-ray tool. Okay, so we'll X-ray the portfolio to get insight into the portfolio. Let's see what I mean by X-ray tool. Let's continue here. So you get X-ray tool from Morningstar.com. Okay. The click tools and click instant X-ray. Okay. This is a basic X-ray tool. Is available free from the Morningstar.com. Let's continue. You might have to register with the Morningstar.com to get the tool. Let's continue here. And after that, we'll enter the selected. So here is my allocation. We're trying to X-ray here, and X-ray when you say instant X-ray, this screen shows up, and I entered up in here the three funds I entered up. It's a total stock market fund, 35%, total international stock fund, it's a 15%, and total bond fund, 50%. Our Vanguard portfolio had bond allocation into 40% in a total bond fund and 10% in total international bond fund. We just combine. We are going to skip using international bond fund, and we just combine them two together into total bond fund. So this is three stocks. Total stock market fund is 35%. Total international stock fund is 15%, and total bond fund is 50%. Let's continue. After that, you submit that and show instant X-ray button. Click that, and after that, you get to the next screen here. Let's continue. Let's continue to the next screen. Okay, the next screen looks like this. Okay, first thing it tells you its allocation is 34% is in US stock, 15% is in international stock, non-US stock, and 48% is a bond, and 2% is cash. So it's a income portion is 48 plus 2 is a 50, and a equity portion, the stock portion is 49, and it's 100% total. So there's some rounding situation here, the rounding errors that with the tool is trying to give you rounded numbers, and that's a rounding error is a 1. Okay, let's continue here. And this square here, 3 by 3 square, first row is a large cap. So it's a large cap is 23 plus 27, which is 50 plus 25, 75. So large cap is 75%, and mid cap is 18%, 6 plus 6 plus 6, and small cap is 6%, 2 plus 2 plus 2. And here's your pie chart. Okay, let's continue. Okay, let's look at what's allocation we got. Okay, equities is 49%, which is almost 50%, and the 1% is the rounding error we have. Okay, continue here, and bond is 48% plus 2%, bond plus cash. This is income. Our debt portfolio or income portfolio, which is 50%. So 50-50, and we got a 50-50. Let's continue here, and let's look at further. US to non-US is ratio is 34 to 15, which is same as we targeted for. We target for 35 to 15, and so this 2.3, which is right on target here. And large cap to mid cap is 75 to 24. It's like 3 to 1, and that's what we're trying to target. Okay, so we are good shape here. So it's all on target here. This is on target 50-50. US, this 50-50 decides our risk tolerance, and this one decides my characteristics of the portfolio, how much is international compared to the domestic. Okay? So large cap, that's a 3 to 1. That's what we tried to decided we wanted to do, and that's right on target here. Okay, and mid cap is 18%, and a small cap is 6%. Okay, now we go into the next section here. We already discussed these three sections here. Now we're going to do a build active portfolio. This is a longer section. Okay, it consists of two parts. One is a selecting mutual funds, which is my research plus analysis, and then put together a portfolio, which is a synthesis. Okay, let's continue here. So then after that, we'll do dry run, which would mean we will subject active portfolio we just designed and a passive portfolio which we got from the Vanguard's recommendation tool. So build active portfolio. What we do, we already have a passive portfolio for our risk tolerance. We already know what our risk tolerance is and what a portfolio structure we need to have. We have determined its structure. We know the structure. Okay? Now we'll build that using three large cap funds, one mid cap fund, one small cap fund, and one or two international funds. Okay, let's continue here, and two bond funds. Okay. Now, I actually tried using portfolios from online portfolios, and these portfolios tend to use low-rated funds, and then I ended up having to find other funds which were higher rated than the ones in the portfolio. Okay, so this time I decided to scrap the idea and just say, okay, we're going to have three large cap funds, one mid cap funds, one small cap funds, one or two international funds, and 2 bond funds, and then we now will do the research for all of them instead of doing the research for. Okay, so select 3 large cap funds from, we'll use Fidelity Picks. You can access that from, go to fidelity.com, click research tab, click mutual funds tab, click Fidelity Picks. In asset class, select US equity. In category, check large blend, large growth, and large value. Okay, let's continue and choose 5 stars. We're trying to find a 5-star funds. Okay, so we go to fidelity.com, research tab, mutual funds tab, Fidelity Picks, check Fidelity Picks, and in that drop down menu, asset class, select US equity. In category thing box, check in this large blend, large growth, and large value, and choose also 5-star. We will try to get a 5-star funds if we can, and then if it not, we'll move that back to try back. Okay, so these are the 4 funds that came in Matic. One Oakmark fund, there's a Parents Core fund, Fidelity New Millennium, and River Park Wedgwood fund. Okay, first 3 funds have a 10-year history, and they were returning 9.19% for 10 years, 10.29%, and 10.32%. Okay, and this one has a 5-year history, 3-year history it doesn't have a 5-year history yet. Okay, this River Park Wedgwood. Let's continue from here. Okay, now our selected outcome funds are Oakmark Fund, OKMX, okay, then Paramus Core Equity Fund, and Fidelity New Millennium Fund. Okay, let's continue from here. Now the screen had 4 funds, only above 3 funds had 10-year history. Let's continue now. Let's try to pick up mid and small cap funds. Okay, this time we'll try to find the 2 funds, and we'll use a screener from Morningstar.com. Okay, let's continue. So go to Morningstar.com, go to Tools tab, click Basic Screener for mutual funds. From Basic Screener, pick up a mutual fund. So this is how screen looks like, and you select 5 stars here, and is a mid-cap blend. Okay, and 5 years, at least 5 years manager, $10,000 at the most for initial investments, and load as a no load funds only. Okay, let's expense ratio as okay, let's continue. Let's see what we got. Okay, during my initial run from screener, I got these 3 funds: HFMDX, which Hanzi Cornerstone Midcap 30, and Ashton Fairpoint Midcap Class N, Longleaf Partners Small Cap, and these 2 funds had limited availability, and this one is freely open to new investors. Okay. So screener picked 2 funds with limited availability, and the screener results don't seem to be consistent. And because of these restrictions, I use screener at Fidelity. At Fidelity, I know if I get a fund that is in fact available for purchase. Let's continue. So we're going to have this fund for my mid cap selection here, mid cap. Okay, let's go look at small cap here. Go to fidelity.com, click research, click mutual funds, click select US equity in asset class, select small blend, small growth, and small value in category, okay, and select 5-star. Only one fund had 10-year history, and that fund had negative year-to-date returns. So if it selected some funds, and there only one of those funds had a 10-year history. I'm trying to get a longer history, and that fund had a negative year-to-date return. So I dialed back my 5 stars to 4 stars, change to 4-star and high return. And this is my screen, and I'm going to pick up this fund here. Has a positive return here, okay, and has a 10-year history here. Okay, 8.6% for 10-year and 7.4% for first year. It's a Wasatch small cap value fund. Okay, this is the one we are going to select here. Let's continue to next page. So we just selected Washet Small Cap Value Fund, okay, and this fund had 10 year history and also positive return for year to date. And year to date is June 2014 data. Today is July 25th of 2014. Okay, and we select TBGVX for international funds, a 5-star fund. It does have a transaction fee. Okay? It's a probably the best foreign large value fund. Let's do bonds. Okay, well this time we try a U.S. News, best funds at U.S. News. Okay, and we go to this URL money.usnews.com/fund/mutual funds. Let's continue. Then I'm going to do some cheating here. Enter TGLMX. This is what happened is that the categories at this that site had a short-term bond funds and long-term bond funds. Did not have an intermediate term bond fund as a category. So entering TGLMX into the fund name gets me into the section of intermediate term, okay, funds. Okay, let's continue. So US News Fund site had long-term bond funds and short-term bonds categories and needed intermediate term bond funds, and entering that fund TGLMX. Okay, so it is number 2, fine, and number 1 is a double line total return bond fund, which is has a shorter history, so we didn't pick that one up. Okay, let's continue. Okay, okay. So far, what we did, we guessed TGLMX, which is fine fund, fine intermediate term bond fund. Okay, it's entered that in this location here. Okay. Then this was number 2 in category. Okay, and number 1 has shorter history. We will find with this TGLMX. Okay, look at suggestion on sidebar. We also did this. We would show you the next slide is the sidebar. Okay, and check the star ratings and history. Pick one more fund, and I picked one. Okay, and this is one I picked, which has a best 10-year return, domiciles, investment grade, fixed income fund. Let's continue. And that fund, further investigation gives me that's $3 million initial investment. Wow. Okay, so we will instead choose a fund from Fidelity Fix, which is we'll pick up Fidelity GNMA fund at this time. Let's continue. Here's the sidebar I was talking about. Okay, this fund number 1 has a short history. Donkey Cox Income Fund has a 4-star. Double Line Fund has a shorter history, and this is one we picked up and from highest 10-year returns, and this one has a $3 million initial investment. Okay, let's continue. Now selected funds so far are, we got the multi funds, and this is my funds. Oakmark Fund, Paranas Core Equity Fund, Fidelity New Millennium Fund, Hensi Corner Store Mid Cap, Wasatch Small Cap Value Fund, Tweedy Brown. So we have this one in large cap, that's mid cap, this small cap. This is my international fund. Okay. And this is my bond fund, TGLMX, TC Double Total Return, and Fidelity GNMA fund. Okay. Let's continue. Issues are that, let's see, TBGVX is a fee fund, and it has a transaction fee. It's most likely the best foreign large value fund. Schwab screener found another fund, SIDVX fund, which has a 5-star and is NTF. So if you care to, you can use that one instead. Another alternative is Oakmar International, OAKIX, foreign large growth. And the problem with this fund is fund is close to new investors in funds marketplace like Fidelity. You will need to buy directly from Oakmar, and then after you got that, may transfer your ship purchases to a broker like Fidelity or Schwab or TD Ameritrade or maybe somebody else. Okay, so there's a backdoor entry into this fine large foreign large growth fund. Oak Market International, and SITVX is a no transaction fee 5-star foreign large value fund. Okay. Let's continue. So TGLMX is fee fund, and they use DLTNX instead. DLTNX is shorter history. I use TGLMX for all the analysis, and personally I use exclusive this fund DLTNX. I exclusively use DLTNX for bond allocation. The manager of DLTNX used to manage TGLMX. Okay, let's continue. So I'm using in my personal portfolio. I use DLTNX exclusively, which has shorter history. Okay? And TGLMX is very similar and has a longer history. Let's continue. So now I added one more fund here, and so we have two international funds, okay, and two bond funds. Okay, let's continue. So have three large cap funds, one mid cap, one small cap, two international, and two bond funds. Let's now our target allocation is equity is 50%, income 50%, US 35%, non-US 15%. That's a 70 to 30 ratio. Okay, domestic owns 50%, and we are domestic here. We'll implement target allocation using the funds we have already selected. So we'll try to implement this allocation using the funds we already. So let's see what we do first. Okay, first of all, we select equity income ratio to equity income is 50-50 because that's a income. They are equal value. 50-50 is the ratio. Equity is 50%, income is 50%. Okay? That gives me my tolerance, risk tolerance. And this is my rule of thumb. US to non-US is 70% is US, 30% is non-US, and here is my tolerance here, plus minus 0.2. Okay? And large cap to mid cap is a ratio of 3. Large cap to mid cap plus small cap is 3, and I'll get a 10% tolerance here, plus minus 0.3. Okay? Let's continue. Mid cap is greater than or equal to 10% of equities, and small cap is greater than or equal to 5% equity. These are the rules I don't mind if I cannot fulfill. These ones, very first one, 50-50, is my characteristics of from my risk tolerance, and this is my domestic to international characteristics, and this is all within caps. Large caps should be larger than total of mid and small cap, and we're using a ratio of 3. Okay, let's continue. Okay, feel free to ignore the last two rules. Okay. So we use X-ray tool to allocate to desired allocation. Okay. Basic instant X-ray was giving me rounding errors. For this exercise, I used a premium version from TD Ameritrade. By the way, I have accounts at all three larger brokers, Schwab, Fidelity, and TD Ameritrade. That gives me access to tools at all of these major broker sites. So let's continue. First thing you do is build up this spreadsheet like this. Portfolio, this is a fixed 100. Income is the variable we just added 50% here. As soon as you add 50% here, a spreadsheet completes that portion. This is 50, which 100 minus 50 is 50. Okay, we are doing 70% of 50 is US and 30% of 50. So from this 50, spreadsheet computes 35 and 15 for non-US. From this 50, that's a 3/4 of 50 is 37.5, 75%, and this is a 25% of 50 here. So in this spreadsheet, this formula here equals 100 minus that value, and here the formula here which is equal to 70% of this value, and the formula here which is 30% of this value, and the formula here saying that it's a 75% of that value, and this is the formula here saying 25% of this value. Okay, let's continue. So only number you need to add is this one in this spreadsheet, and tells you the structure of the portfolio using our rules of thumb. Let's continue from here. Okay, so enter allocation from X-ray. Let's continue with target allocation. We're going to use X-ray here. X-ray is a tool. Okay? So first thing, look at that is I got this data for each of the funds we are considering on 25th July 2014. Okay, let's continue here. Here's a table I built up using a premium version of X-ray. I got the premium version on a TD Ameritrade. Okay, let's continue here. So this is the Oakmark is a large cap fund, and FLCSX is large caps, and so is PRPLX. Okay, let's see what's going on here. So this is a large cap fund and only have a 69% in large cap, 28% bleed into the small cap, and 3% is bleed into the small cap, 28% into the mid cap. Okay, and has a excess about 13% in bonds and 23% cash, and about 7% in international. This is next fund here, royalty large cap fund, and it has a 12% in international and 2% cash, and is 84% in large cap, and has a bleed into mid cap and a small cap also. This fund PRBLX is also have a bleed into large cap fund, into mid cap and small cap. This FMILX has a bleed into is as a large cap, mid cap, and small cap. Okay, here is a mid cap fund, HFMDX, and it's a mid cap fund and with the bleed into the small cap fund. Okay, here is a small cap fund here. WMCVX is a large small cap. It has a bleed into mid cap and a large cap. Okay, here is a Tweedy Brown is a global fund, and it's a international is 71%. It does have a domestic component to it and has a significant cash portion. Okay, and look in here, it's a large cap is 76, so it's bleed into the other sectors here. Oakmark International similarly is mostly large cap, has bleeds into mid cap. Okay, and these are my two bond funds I have, and they don't have any component contribution to large cap, mid cap, small cap. This is a component. Large cap, mid cap, and small cap are part of the equities only. Okay, so it has a 92% in bonds and 6% cash, and the other is 1.77. And Fidelity Ginnie Mae has a 96% in bonds and 4% cash. So with this table and the table on the previous slide, we should be able to put together, allocate our funds to generate a desired. Okay, we will use X-ray tool here to generate a target allocation. Let's continue here. So use X-ray tool to allocate to desired allocation, and after trial and error I get this. Okay, spend about 20 minutes to try to get this desired allocation. Oakmark 13%, PRBLX 13%, FMILX 13%, HFMDX 2%, and WMCVX 1%, Tweedy Brown Global Value Fund 6%, Oakmark International 7%, and TCW Total Return Fund 23%, and Fidelity Ginnie Mae 22%. Okay, so that gives me, let's enter those into a X-ray and see what X-ray tells me. Okay, let's continue. Okay, let's continue from here. So we're using a X-ray of target allocation and comes up 35% US allocation, 15% international allocation. And bonds is 43% and stock cash is 7%. So equities is 35 plus 15, which is 50%, and bond income portion is 43 plus 7, which is 50%. Yeah. So we were designing 50-50 and we got a 50-50. So that's a great allocation. Let's check in my capitalizations and large cap, mid cap, and small cap. So large cap is 19 plus 26 is 45 plus 28, that's 73. 73 is large cap, and there's a 21 is a mid cap, and small cap is a 7. So 21 here, 7 here, and 73 in large cap. Let's continue. Okay, so we got a US 35% and non-US 15%, equities 50%, 35 plus 15 is 50%. Okay, bonds is 43%, cash is 7%, and income portion is 50%. We had 50-50 our target and we made it. Okay, let's continue here. And large cap is 73%, mid cap is 21%, and 7% here. So ratio of 73 to rest of them is close to 3 to 1, like we were trying to target. Okay, let's continue. Okay, by now you have seen that it takes practice to get used to building portfolios. The two of the hardest things are selecting funds, which is the hardest, I believe, and allocation, which is doable, which doesn't take that long. Selecting funds is can be frustrating. Okay? So most folks take shortcuts. Let's see what shortcuts are. Pick up funds from a list of like Fidelity picks, Kip picks. These are Kiplinger picks for Personal Finance Magazine, CNN Money selections, and that's easy because just get a list. Okay, and some of the funds in the list don't have the 5 stars, and some of them have 3 stars, or occasionally maybe 2-star funds also. Let's continue here. So the shortcut is pick up a list of funds from pre-selected funds from someplace else. Okay, and that's easy. So if you want to do that, you can go to fidelity.com, click research, click mutual funds, and click view funds from picks from independent experts. Okay, click on Kiplinger tab for Kip picks and the Money Magazine tab for the other picks. Okay? So click Money Magazine tab for money selections. Okay? And for allocation, ignore all the bleeding into another asset. Okay, so if you ignore the bleeding into another asset class, so it's straightforward. Large cap fund is a large cap, mid cap is mid cap, small cap is small cap, international is international. Okay, so online model portfolios are no exceptions. They ignore the bleeding and they use a large cap fund consist of all large cap, assumed to consist of all large cap, and mid cap funds assumed to consist of all mid cap. Okay, so sharp portfolios are no exception. Okay, such portfolios do not represent selected allocations. So we can say we design 60-40 portfolio, but in fact it is not 60-40. Okay, let's continue. And most likely it's going to have more in income than we designed for. Let's continue. Okay, let's go to the next section here. Okay, and we already covered these first 3 sections here. Okay, and now we are going to do the last section, which is dry run. Let's continue. Let's continue. How do we know if portfolio is any good? Okay, let's continue. And so we dry run it, do a back test on the same, and compare against some reference portfolio. And there's no way to do a forward test, and no one knows the future. We only do a back test. Okay, let's continue here. How do I do a back test? Question is, you can download a back testing tool from the location. Okay, easybacktest.blogspot.com, and I believe that gives you 2 buttons for download, and I suggest you download from PyChart. The other download button would download a lot more than the tool. Let's continue. Now here is a entered passive 50-50 portfolio on to my back testing tool, and it's 130 months worth of of the growth chart here, which is almost 11 years. Okay, it says that annualized return was 7.17% and standard deviation was 8.31%. Okay, and I had three stock funds. Vanguard Total Stock Market Fund 35%, Vanguard Global Stock Market Fund is 15%, and Vanguard Total Bond Fund was 50%. Let's continue. I did same thing for 130 months for the active portfolio we just designed, and it says the return was 8.71% and standard deviation was 8.40%, and there are about 8-9 entries here. Okay. Let's continue to the next slide. Here is my comparison chart where it says that this is probably the best portfolio out of three. I compared, this is my active portfolio, that's my passive portfolio, this is my Standard & Poor's portfolio. It seems like first of all, it's clearly this has a lot higher standard deviation. That means risk is a lot higher for the Standard & Poor's than it's for these two portfolios. Okay? And this is probably the best return out of three. Okay? This one is slightly higher return than this one. Return is on the y-axis. Okay, and this is a also a lower return. This is a passive portfolio, a lower return. Okay, but however, passive portfolio does edge out in the risk category. It's slightly lower risk for this portfolio, a lot lower returns. So this is about the best return portfolio, which is active portfolio, which you just designed. Okay, here's the my for last 10 years. Here is it year by year return results. Okay. So in 2005, active was the worst out of the three, and Standard & Poor's was 7.4% and it's 7.1%. In 2006, active was in the middle here, 13.60% was return of the index, and 10.60% was the return on the passive, and active had 11.3%. Okay, and in 2007 also is in the middle of the pack. Okay. Passive had the highest return, and S&P 500 had the worst return, and active had a middle. In 2008, active was outperforming everybody. So look at that. In the active column, we had a one worst return result, 1 year worst, and 3 years best, and second best in the rest of them. In the passive column, they had one best year, two second best years, and other are worst years. Okay. In the Standard Poor's column, it's either you rarely comes in the second best, usually either come in best or the worst. Okay. Let's continue. In my personal portfolio, I use fewer funds. Okay. For large cap, I'm sold on dividend stock investing and invest exclusively in dividend aristocrats from Standard & Poor's 500. Okay, aristocrats are the stocks they have not lowered their dividends for at least 25 years. Okay. Let's continue. For income portion, I use exclusively DLTNX, this double line total return series and fund, double line total return series and fund. Okay. And for international, I use exclusively Tweedy Brown Global Value Fund, and I'm considering to add Oakmark International. So for international, I use exclusively Tweedy Brown Global Value Fund. This fund has a fee, transaction fee. Okay, it's no load, but it does have a transaction fee at most the brokers I know, like Schwab, TD, and Fidelity. Let's continue here. Depending on the size of portfolios, no transaction fee funds might be the best choice for you. Okay, so that might limit the funds you are going to use in your portfolio. Okay, let's continue. Let's continue. Okay, I sure hope that was helpful. Backtesting does not reveal its future performance, it only tells you what has happened in the past. Okay. Backtesting does reveal that the portfolio and the fund managers have navigated the markets through ups and downs, including the crash of 2008. They, these managers probably have skills to manage portfolios in the future. Probably is the key word here. Okay. Let's continue. As always, don't put all your eggs in one basket. Wash the baskets periodically. Okay, let's continue. And good luck investing. Okay, yes.